Hello everyone and welcome to Stock Picks by Tim. Today I'm going to be talking about a new stock that is rarely mentioned. It is APTS is the ticker symbol. It's Preferred Apartment Communities and this is a REIT. But let's get into this here. And I've been in this one for quite a while. I actually got out recently, took my profits. But yeah, it's a really good dividend and I'm going to just show you guys their site. I'm going to show you what some people think about it. I'm going to go into the charts in the end here and just kind of my take on this REIT. But first, what is an REIT? So for anyone that isn't aware of what one is, when you look at this, this is the main takeaway here that I want to show you guys. So REITs generate a steady income stream for investors, and that would be in the form of dividends. But they offer very little in the way of capital appreciation, meaning the stock price typically kind of stays sideways, stays somewhat stagnant, unless there's like a crazy event, like the coronavirus. So, and also another takeaway here, they need to pay a minimum of 90% of their taxable income in the form of shareholder dividends. So that means that they're very limited in the income that they make to reinvest or purchase more communities, that sort of thing. So that's kind of a negative there, but it's a positive if you're just looking for a steady dividend stock. Wanted to show you their site here. They have 13 states that they're in. So that's a good sign showing that they're diversified at a state level. Now when you look, these are like really nicer apartments. Here's a multifamily in Kansas, I believe. Looks really nice. We've got all kinds. We got Texas, Georgia, Florida. But you look at here, there's a Walmart that they supply the property, so they lease or they loan the property out, and the Walmart or whoever would pay them. The shareholder would get 90% of that income, that taxable income, in the form of a dividend. Now look at here's all these Publix that they own. So they're somewhat, it's a mixed. They're kind of mixed. They're more in groceries. They got Food Lion, Aldi's, and these are, like I said, they don't own these companies, but they are just, providing the rental space essentially. Harris Teeter, I haven't heard of that one. I don't think that's in my area, but that's another shopping center. We've got Kroger's, we've got Sprouts. That's another one. I've seen a couple of those. But really nice apartments though. Like when you look at these are just like kind of very upper class, really nice looking apartments. That's mostly all I wanted to show you on their site. They just have a well diversified portfolio of companies that pay them rent. They're all Class A multifamily properties in the Sunbelt markets with populations of over 1 million. So they're in kind of higher populated areas mostly. They have good screening standards. They've got retail strategy. So there's Publix, food and pharmacy. But the thing is they had a lot of college. They had a lot of college campus, like dorm rooms and stuff like that, I believe, and they an office space, and they actually cut the cord on that. So that's actually a good thing. Just with the way things are moving forward to kind of being more, everything like on Zoom and people not having to go into the office. So that's a positive thing in my opinion. That is very good with this. One thing I noticed is that they rent to TJ Maxx. That might be one negative in terms of companies that they rent to. But it's I think TJ Maxx I believe is more like a Ross kind of a store. So maybe during any hard times, those kinds of stores will probably still do relatively well. Looking into the stock, we had an after hours nice little rally where after hours were at about $13. We had an okay day, pretty sideways day today, a little bit up, but the market cap's only 667 million, so it's very kind of a smaller cap. I actually wanted to show you this article talking about that most of these REITs have been raising estimates. So this says here that their current year estimates have risen from 85 cents to $1 a share. This has helped them earn a buy rating from Zacks Rank, further underscoring the company's solid position. Now, they mentioned that if you're looking for a decent pick in a strong industry, consider Preferred Apartments Communities. Not only is it in the top third industry currently, according to them, but it could be an interesting choice in a great industry segment with a fantastic dividend. And, they mentioned that rising tide lifts all boats because across the board, most of these REITs are gaining higher. They're boosting like their earnings estimates and stuff like that is basically the takeaway here. So you've got someone talking about it at least. It's a very rarely talked about REIT or stock. I wanted to finally just go through the chart real quick. So here's the 5-year. And yeah, we had a nice little drop. I purchased some down around here, sold off around here. But let's get into a closer chart. So we're looking here at the 3 month. It's been just steady on a rise lately. Because with the raising earnings estimates and all that good stuff, it's definitely been kind of rising back. But when you look back at the 5 year, we are not back up to the pre levels, the pre Roni levels. That was, more like in the 13, 14 range. It was a little in the 15, but that was kind of, it seemed like it was on a downtrend as we were getting kind of news of the pandemic going on. Up here we had a nice drop. I believe this was probably a dividend payout maybe, because typically when a company pays out dividends, especially with these kind of higher paying dividends, it'll drop afterwards typically as shareholders are exiting and just taking their dividends and running. But now when you look at the 3 month, we're actually overbought. And I would personally be waiting for a cool down. I'd be looking for probably the 50-day, because when you look back here, you see the 50-day, when every time it goes down under it, it seems to bounce off pretty nicely. Here it hit the 100-day. So it does hit the 100-day often enough that you probably could wait for the 100. Here we're way under, but we just shot up over them. So, it was like over a month or so long period. But I would definitely wait for a cool down. Just keep this on your radar. It's definitely a good stock to keep an eye on. It pays a good dividend. I actually have some for my son. I don't have any anymore, but my son has a nice little position, and that's actually one of his best performing stocks so far. When I bought it for him, it was still down in like the 11 range. So I noticed that it was kind of cooling down here, and this is when I scooped some up when it was hitting that 50-day. And now we're kind of coming back up. The last pay date that they paid a dividend was July 15th. And their X date is September 14. Now you've got 8 days. Here's the shot clock. That's kind of cool. Never seen that before. But you've got about 8 days to get in if you want to catch the dividend. And that's about all I've got for you here. Just an interesting REIT. You definitely want to diversify your portfolio. You can't get in all just speculative stocks. You definitely want some solid things, maybe some dividends. My cousin actually has been looking at John Deere and a little bit at Caterpillar. So those are another one potentially to put on your radar, especially as the infrastructure bill comes through. But those could be ones that I might check out later. Thanks again, guys. If you got anything useful out of this, let me know. If you're invested in preferred apartment communities, what do you think of it? Where did you get in, and where are you planning on getting out? I appreciate you guys, and I'll see you next time.